Coming up in today's video, gold is lower, the dollar is higher, stocks are a little mixed, and oil prices taking a big drop here this morning as well. Meanwhile, we've got Bitcoin just pulling off of its all-time highs over $123,000 per coin, and you've got things like Ethereum breaking up into the 3200s. We'll also talk about bond yields and the expectation for the Fed to cut rates, and of course, we'll take a look at some currencies with the euro dollar making a push lower today. As we get started, all I ask is that you make sure to hit the thumbs up button, subscribe to the channel if you're new. Let's jump in. So yesterday we had the consumer price index, which we covered in the video yesterday, but today we've got the producer price index. And sometimes people overlook this statistic. The producer price index is wholesale prices and are also a very important measurement of inflation. And we actually saw this yellow dot, which is the expected value for the producer price index year over year, was expected to be 2.5%. Today we got a lower than expected read for this number. You can see it populated in blue, representing the cooler print of 2.3%. And remember that yesterday's expected reading for the consumer price index, core inflation data or core CPI, we were expecting to see a 0.3% rise in prices, but instead we only got 0.2%. And the consumer price index did rise, but it was in line with expectations of 2.7%. So was inflation this week hot, mixed, or cool? I would say that it actually sort of leans cool. When we consider what we just went through, yes, CPI headline went up, but it went up in line with expectations, so it wasn't a huge surprise. And if we take a look at the producer price index this morning, it was mostly cool. Core CPI, of course, also was cooler than expected, so I would say that this was a mixed to slightly cool round of inflation that we got this week. But if inflation was cool, then why is the dollar on the rise? Well, I do think that we have to actually pay full respect to yields, which I think make a little bit more sense here in relation to this question. Yields are declining, suggesting the bond market thinks that more rate cuts are likely coming in the future with this softer inflation print. You can see it in the US government bonds 10-year yield chart. I think it's possible that the dollar itself was a little bit oversold and expectations for rate cuts have gotten pretty strong here in recent weeks. And this is also a bit of a crowded trade. Remember that when everybody thinks something is going to go lower, they sort of price it in accordance. So I think going into this week, we had a lot of expectation that we're going to get super cool inflation and, the jobs market's going to cool off. But instead, we've seen a round of NFP data that was solid and inflation prints that were sort of mixed rather than outright straight up really cool. So while the dollar is pushing higher, I don't necessarily see this going significantly higher from here. I think that there is sort of limited upside and limited downside in the dollar due to the strong jobs print and the soft to mixed inflation report. The bigger question is the dollar strength that's coming into the market right now producing some possible setups in the currency market? I've just navigated to the Edgefinder's top setups page and filtered specifically for currencies that have a bullish or bearish bias. What we can see here is that we have several currency pairs potentially setting up for some opportunities. In fact, I've already just recently taken a bullish position on the Euro CAD. The Euro CAD has pulled back here a little bit recently, tapping into this support level around 1.59, which was a significant previous level of resistance. And I specifically like this currency pair because if we take a look at Europe, it's been recently outperforming expectations on its economic data report, according to our economic surprise meter. And if we look at Canada, Canada has been underperforming expectations here recently when looking at these two economies' corresponding economic metrics recently released. Now that was a lot of jargon, and if you're not a super hardcore fundamental analyst like myself, then basically what that says is recently Europe's economic data has been beating expectations and Canada's has been missing. So when I look for currency trades, I'm typically looking for something that's outperforming versus something that's underperforming. This is one of my favorite tools as a currency trader within the Edgefinder. And if you have a copy of the tool, just navigate to economic heat maps and select the eco surprise meter here on the left. Of course, if you want to look in more detail at the European economic heat map in its full, scoring breakdown, you can of course select EU economic heat map or US or whichever currency you want. We have all of the majors here. And speaking of the Edgefinder, I should let you know that currently we're doing our biggest discount price of the year. We're offering 45% off the Edgefinder for a limited time. The best part about this, the Edgefinder is a one-time payment to get access. And if you need to split up the cost into a few payments to make it more accessible to you, we do offer that if you send us a direct message using the first link in the description down below. By clicking that link, you'll be connected to a real person on our support team simply select that you would like to hear more about the 45% off summer sale that we're offering, which is extended to both Edgefinder or our VIP Signal service. So don't miss it. It is the best price that we offer all year long. A lot of traders in our live stream today were a little bit confused as to why gold didn't move more than it currently did. And gold has been really range bound here recently. If you've been watching this thing on a daily chart or even on an intraday level, gold has mostly been trading sideways, which leads a lot of traders to get frustrated. You know, they're looking for moves one way or the other. A lot of traders trade this as their primary thing that they watch. And so when you get sort of this consolidation sideways, it can be frustrating. But I do think that the overall picture for gold is sort of mixed to slightly long-term bullish. Why do I say mixed? Well, if we navigate to the gold and silver scanner on the Edgefinder, you can see that the Edgefinder is getting a neutral reading currently. When understanding the economic data, you can see that interest rates, unemployment data, and employment change here recently has been dragging down the score of the Edgefinder's reading on gold. Specifically, NFP beat expectations, unemployment rate went down. These are positive things about the labor market. And remember that gold thrives on chaos. So security in the labor market is not a very bullish thing for gold. But as we just got done discussing when it comes to inflation, inflation is cooling, which suggests that rate cuts are likely coming for the US this year. So that's bullish for gold. So as we just discussed, we have some forces here that are bearish for gold, which I would say the strong jobs print, not particularly bullish for gold, and some things that are strong for gold, which is the probability of rate cuts this year increasing. So the net result, gold trades sideways and frustrates the heck out of technical traders. So keep an eye on your fundamental screens to know when is a better time to be trading gold and when is a time to sort of sit back. Now you might say, well, Nick, that's all great, but then why are you trading gold? Well, I am long gold, which I added to my portfolio for a number of reasons, but one of the biggest ones is that I am currently, based on what I just got done describing, specifically the idea that jobs are strong and inflation is cool, really favors stocks and indices. So currently my portfolio is very heavily allocated to being long things like the Russell and a handful of stocks that I really like. So with this environment of inflation cooling, so the Fed can cut rates, but jobs strong, so the consumer's still in there, that's not very favorable to gold. It's sort of mixed for gold because, again, you get inflation cooling rate cuts, that's good, but jobs print strong, that's not so good for stocks. So I really right now prefer the idea of being bullish on equities and indices. So I have a very heavy exposure to that at this time. So when it comes to gold, why do I have a long position on gold? Well, it did get a reading on the Edgefinder of bullishness a few weeks ago when I took the trade. But also in addition to that, I am hedging my portfolio a little bit in case we get some sort of geopolitical risk, which could all of a sudden shoot gold higher. This is a bit of a hedge in my portfolio where I think that there is some potential for gold to continue its long-term uptrend. But in terms of short-term expectations for gold, I'm very mixed to neutral. Where I'm not so neutral is my Russell trade, which is still going strong. And if you've been watching the videos here recently, then you know I am trailing a stop loss on this trade and have done so several times since initially taking the trade over 50 days ago. My best trades typically last a long time because when I'm able to trail a stop and keep doing so, we could see another move like this, in which case I would continue to trail stops and let this one winner pay for so many of my losses. And that's the beauty of letting winners run, is that one really phenomenal trade can make back all the losses and put you very green overall for the year. Speaking of which, here's an updated view of my overall returns this year on this main public account that I talk about frequently in my videos. You can see so far we are up about 19%. Relative to the Dow Jones, which is up about 3.7%, my account is up 19%. So being long indices is definitely where I prefer to be parked at this time. I think the path of least resistance for indices continues to be higher, as illustrated by the Edgefinder's top setup scanner. Specifically, I really like the idea of staying bullish on the NASDAQ and tech stocks in general, especially if we can get pullbacks that would produce possible entry points for me. I also thought it was interesting that in the latest round of commitment of traders data, we did see some big accumulation of the NASDAQ by institutional traders. If you have a copy of the Edgefinder, you can track this under our institutional positioning tabs. Look for COT data or COT data history. Specific to the NASDAQ, I'm looking for a pullback. If we were to get one to the 22,000 level, this would produce, in my opinion, an attractive risk reward profile to look to go long again. However, currently the put to call ratio is suggesting a neutral sentiment by market participants. Remember that a big move higher in the put to call ratio suggests that people are fearful and buying puts aggressively, and a big shoot lower in the put to call ratio shows a high demand for calls. Calls, of course, being bullish bets. If there's a huge proportion of calls being bought in the market or traded in the market, that to me signals a little bit of a more contrarian bearish signal or cautionary signal. By the way, for gold traders out there, we do actually have gold as an option within the put to call ratio as well. If you have the tool, simply go under market sentiment, select put to call ratio, and you can choose gold here in the top right. Another indicator that is suggesting that this market may be a little bit stretched to the upside when talking about stocks and indices is we've gone from an environment where people were very bearish on the market to now people are starting to get pretty bullish. Now, I wouldn't say this is incredibly stretched at this time, but you are seeing the majority of market participants starting to get bullish now that the market has gone up so much. It is interesting how this typically happens over and over. Everyone gets bearish, then the market goes up. Once the market's gone up a bunch, people start getting bullish, and so on. The cycle continues. This morning, we did also get some crude oil inventories that came in less than forecasted, which is causing the oil market to move lower today. Here's a look at West Texas oil. You can see from the ceasefire announcement stuff that really caused this thing to drop. We've kind of been consolidating, but now back to the lows of this range. Perhaps oil is due to continue to move a little bit lower. Perhaps this 64 level actually going to get retested. After, if you've been watching the streams and videos recently, I've been talking about oil prices becoming potentially attractive around the 64 level for a while. If we do get a push lower, I'm probably going to continue to add more shares in my stock portfolio to energy stocks that I like. One of the stocks specifically that I like is Energy Transfer. They, of course, move, it's in the name, Energy Transfer. They move natural gas and oil all across the country. And so it is a stock that I think in terms of an infrastructure build out with the Trump bill, I think could stand to continue to benefit from that type of environment. I do typically like energy stocks and industrial stocks if we do get market pullbacks. Of course, stocks that I'm watching, I'll be covering on my secondary YouTube channel, Trader Nick Stocks, if you're interested. Today's video is sponsored by Vantage. If you're looking for a better CFD brokerage and you're outside of the United States, check them out. Vantage offers low trading fees. They have a copy trading service, and they also offer a generous welcome bonus to subscribers of my YouTube channel if you use the specific link found in the description down below. Another cool thing about Vantage is they let you trade pretty much everything. You can trade Forex, you can trade cryptocurrency, CFDs, you can trade stock CFDs, indices, gold, silver, all sorts of different markets. So if you're interested in checking out Vantage, make sure to use the link in the description down below to take advantage of the welcome bonus they're offering my subscribers.
Some fascinating data out today on both sides of the Atlantic, Nick, both here in the UK and where you are in the US. Inflation has climbed ahead of expectations. So I imagine I'm quite disappointed with this data that's come in over the last few hours.
Yeah, Johnny. So in terms of inflation this week, we got a lot of information. In recent weeks, we've got a lot about the jobs report and data there, which was surprisingly resilient. So all eyes were kind of on inflation this week. Actually, kind of an interesting report between the consumer price index and the producer price index. So yesterday we had the consumer price index, and I think that's an important place to start because the consumer price index year over year headline statistic went up. So we went from 2.4% inflation. We were expecting, so I saw analysts mix between 2.6% expected and 2.7% expected. We did actually get a uptick to 2.7% year over year inflation, which is a rise in inflation. However, there is some further unpacking that we can look at as to, if it was really that hot, why didn't the dollar go up substantially more? Well, it did go up, but it didn't go up too much simply because of the core CPI. So core CPI actually was not nearly as strong. It actually was, for month over month, we had core CPI expected to come in 0.3%. We actually saw a 0.2% rise. So slight softness in the core CPI number and slight heat, I suppose, in the headline CPI number. So The consumer price index yesterday, in some ways, was sort of mixed. It was not particularly hawkish or particularly dovish. In fact, yields didn't change very much yesterday. However, today we got some follow-through information with the producer price index, and producer price index today was actually relatively soft. The producer price index month-over-month reading was expected to go from 0.3% to 0.2%. We actually got a number that came in at flat, so 0% month-over-month producer price index readings. So we did see some softness in the producer price index. On the core producer price index number also, there was some softness there. So in totality this week, inflation did slightly rise on the headline number. Well, it did rise on the headline number for a consumer price index, but it was not a particularly hot inflation print or a particularly soft one either. It was kind of a mixed report, all things considered, between our two big ones, the producer and consumer price index. That being said, soon we will, of course, also get the core PCE numbers, which are, as according to the Fed, the preferred measurement of inflation. That being said, the dollar index is on the rise this week. It's had a much needed relief bounce. The US dollar has been in pretty much a downtrend here decisively for most of 2025. However, this week we have seen a nice bounce up. Dollar index trading 98.85 here this morning.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.